Hello everyone, welcome to another video by Optionables. My name is Ayush and I'm a trader. In this video, we'll analyze Nifty and Bank Nifty for tomorrow's expiry. Before we start that, last week Nifty opened gap down and there was a follow through down move because of Infosys. But that week fully ended in a range between 17,600 and upside 17,800. So this week what happens is every time we go to 17,600 there is support coming there. And then there is a rally. And today finally we are able to close over 17,800. And one more thing which is very crucial to note down, if you see global markets, from last 2-3 days global markets are weak and that actually turns Singapore Nifty futures to open gap down in the morning, but yet after gap down there is no follow through down move and we are again heading up. And from last 2 weeks if you see, Bank Nifty was quite bullish than Nifty. So it is already heading higher and stronger than Nifty. So what I believe is if in Nifty we are able to break 17,850 on a closing basis tomorrow, and on Bank Nifty 43,000 once it's taken out, we may head for a new rally and we may be having a start of a broader rally which will help not only Nifty Bank Nifty but other broader stocks or other sectoral stocks also. And why 43,000 is important for Bank Nifty? If you go back to January, Adani fall started when Bank Nifty was at 43,000. So that whole range bound consolidation and the budget day full swing up and swing down, that actually bring us to notice 43,000 level. And if you are more into technical patterns, there is a inverted head and shoulder which is getting formed on Bank Nifty also. So if you're a guy who is looking into trading, swing trading or cash markets, the first advice which I will give you is to stick to broader sectors rather than individual stock. For example, if a sector has to go up, any stocks which are good in that will eventually end up going well. For example, currently if you see, hotel sector currently is doing well. So it doesn't matter which stock you pick in that sector. If you kind of pick which are showing momentum in that sector, 2-3 stock out of any whole broader 10 stock will end up giving you a good risk to reward, and at the end what keeps going up you kind of average that up. So that is how the full theory of cash market trading, where what you do is you cut your loser short and you keep averaging your winners up. So that was a broader analysis of how the markets have been. Now we'll go to screen recording and we'll analyze Nifty and Bank Nifty. Hello guys, welcome to the screen recording. In this video we'll start with Nifty and we'll analyze Nifty on a bigger time frame, which is for tomorrow, which is 2 hours. So when we analyze Nifty as a technical analyst or as a chart pattern observer, you can see that we are seeing an inverted head and shoulder pattern. So first of all, if you ask me whether I think personally that this patterns work or whether I believe in this patterns, is I generally don't stay very rigid with pattern. What I mostly see is absolute structure and a particular level which is getting like touched multiple times. So what happens is, last time whenever market has approached 17,850, I'll just mark that level for you so that we can have a good idea about it. 17,850 whenever market has approached that level, market has literally gone down. So you see here also we approached it and it went down, and in this full rally one side. As I told in the last video that whenever market one way goes up more than 1000 points, it is nearly impossible for the market to continue go up that way. Because first of all is people who are having profits in this rally will be scared of any fall, and with any blip coming downside, they will be scared. So in this rally, whenever the market goes up with any blip in the downside, what people generally do is they end up booking profits. And first of all, if you have to initiate new long position, you can't keep very big stop losses for your trades. So now you see the market literally came down from there, and when the retracement happened, the market bounced from 17,550. So we can see few things clear that whenever the market is getting sold into, the market has some support which is coming into, and this range which was due to Infosys opening gap down has been like broken on the upside, and we have seen a close above 17,800. So what is our analysis for the broadly Nifty is, until market is above 17,700 or 17,650, we will stay with a bias which is range bound to bullish. Because for example, there is a saying that never go short on a very dull market. So never short a dull market, because first of all, looking at this level, I personally feel that looking at Bank Nifty and Nifty, both are looking good, and for any reason to sell, we should wait for a close below 17,500 or 17,600. That is because whenever the market has a good reason to go short because of Nifty, first of all opening gap down, and secondly Infosys opening 10%. So that actually didn't have any follow through down. And if you see individually, Infosys also So Infosys has been gathered in this range only. Here we open 10% lower, and then see we are having a consolidation here. So you can see that this compression here, the reason I call this a compression, because the range is nearly 1% and we are here for last 2-3 days. So whichever side this range is broken, we can see a follow through move in Infosys there. So now for Nifty, for tomorrow's expiry, we'll go and analyze on 15 minutes. Reason being that it will help us to get good levels from where the market can bounce, and secondly, it will help us to stick with intraday trading as well. So when the first thing we see for tomorrow's is the level which is important is this one, 17,720 or 17,700. So I personally believe until the market is not opening a gap down below this, anytime we approach this level, we will get a buying opportunity and the market can revert back. And for tomorrow's expiry, we'll mostly try to play range bound to bullish trades, and to get extra credit or to go aggressive, we'll look for any reversal levels, like which are where the market has literally turned its direction. For example, what I mean by reversal levels is, or maybe it is also called decision point trading, when we particularly give importance to a particular level where the market has literally turned direction 4-5 times. For example, you see 17,720, when the market came here, it bounced, and next day it opened here, and from here only it fell again. The same 17,750 level was tested, we went down. But you see one thing, for the market to continuously go down, there has to be consolidation, and this follow through down move here for 15-20 minutes we saw a breakdown. But you see next 15-20 minutes there was a rally again, and from there on, this Monday also we saw an initial sell off, then again we saw one way up, and today also we saw initially correction and then up. So there is a pattern which has been set, that the market starts with a gap down or a gap up, initially correcting, and then in the second half we are seeing aggressive buying coming. So this is a classic example of how the markets can form higher high and higher low. So for tomorrow we'll stick to range bound to bullish trade until market breaks 17,700 on the downside, and on the upside once 17,850 is broken, or let's say that is very important to actually talk about, is if the market opens with a big gap up. So in that case, what will we see is for it to bring a range into, like for example, it forms a range and then we can decide which way it want to go. But in the case of a flat opening, let's say the market opens flat between 17,850 and 17,720, and then it breaks on the upside. So that will be a very bullish sign, because that indicates that on the live market, fresh buyers are coming, and it is not due to a sudden overnight news. So this is our Nifty analysis. And going to Bank Nifty from last 2 weeks, in spite of Nifty gap down and Infosys gap down, we are seeing one way up move in Bank Nifty. And you can see that this consolidation range, which we can literally mark, and I'll show you this. So when you see particularly this channel which Bank Nifty was trading in, this channel was broken with a gap up, and as I said earlier also in Nifty chart, that whenever market opens with a big gap up, it will literally not be a good sign to go bullish. But see, when it came down correcting as per decision point, this level was a level where it literally changed direction 3 times, and from there only it again went up. So yesterday also we saw a range breakdown, if you can see in the end, but there was a follow through down move in the opening, but it didn't sustain anywhere. And if you see the level from where it got bounced back is actually the same level from where this range was broken. So we can actually call this as a breakout retest, because whenever the market goes up, it initially first time when it gets a retest, it's a tennis ball bounce effect. Like for example, if you toss a ball on the ground, and the first bounce will always be higher, but if the ball suddenly keeps dropping to the ground, its energy will be lost. So the same thing goes into markets also. The multiple times the market tests this level, now this level will become weak on. But until and unless the market is above 40 to 450, there is no reason in Bank Nifty to go bearish, and we'll stick to range bound and bullish trade. So for example, tomorrow's range which we think is important is 43,000 on the upside and 40 to 450 on the downside. In this range, we will play range bound. Whenever this level is approached on either the side, we can actually play for low risk, high reward trades. What that means is you can have a very small stop loss and play for rejection from here. So accuracy will be less, but you can actually get very high reward if that turns around well. And once 43,000 is broken, we can see a good rally on the upside. So that was my analysis. If you like this video, like, share and subscribe to Optionables channel. Thank you.